Sprinkles! Altcoins have been dog shit this cycle. Do you want to know why? I have the answer for you. Interest rates. We are going to go through some deep discovery here, friends. But I'd like to give you the information up straight away so you learn, you start learning. So I've constructed this chart here which illustrates others BTC with the interest rates. So you can have a look at the performance of others BTC as interest rates deviate up or down. Now, is it a coincidence? Is it spooky luck? We'll see. But what we're actually going to find is, in a nutshell, before we go deep, just so you know, okay, interest rates, they're now 5%. They used to be 0. They used to be like 0, 1, or 2%. So when they were 0, 1, or 2%, everybody was simultaneously, without connecting each other, they were buying growth stocks and crypto altcoins. But now, something has changed. In our cycle, friends, right now, the Russell 2000 is the lagging indicator. Do you know in the past cycles, it wasn't always the Russell. It was the Dow Jones. The Dow Jones Industrial Average has basically boring blue chip utility stocks, one of the oldest indexes, right? It's got Apple and Microsoft in there, but they are utility now. You know, like Apple sells a phone and stuff. They are utility, even though we think of them as stock tech. But no, they're the biggest now. The utility, right? So when interest rates are high, these guys are okay because they're selling a more defined product. But what happens when interest rates are high? The high growth, speculative, yield chasing stuff gets crushed. The growth part gets crushed. And when interest rates are high, also, your ability to pay off workers and stuff basically gets put under pressure because you're not generating money today. You're trying to basically grow for something into the future. So what I'm going to do now, friends, is show you spooky coincidence or wisdom of the crowd. So in this cycle, the Russell 2000 has been the worst lagging index of all the majors. And what I've done on this chart, you can actually see all of the indexes together. Now, I know there's a lot. It's very interesting, friends, because they're so correlated together. Like, they're really, really, really correlated. And it's like it's percentages, you know, up and down and this and that. But in this cycle, there's been a big problem. So what I'm going to now do is just show you the pain that we have been sitting through. So we have the back, obviously the back candles here is others BTC. What we can do now is put them all together. So I'm just going to like remove the interest rate part. So see this yellow line? That is the Nasdaq, right? Now the Nasdaq and the S&P 500. So the S&P 500 is broad. That's obviously beaming through the highs. We just had a daily close, new all-time high, right? And you can see that right here. This is the daily. See, Nasdaq broke its all-time highs from the previous cycle like a long time ago. Look at that. Nasdaq has done really, really well. You see that bank? It's like it's beamed up much higher. But the Nasdaq, that's the S&P 500, sorry. And the Nasdaq as well. They both basically crushed the highs. But what we're looking at today is a different story because Mr. Russell 2000, look where he is, okay? His high from 2021 is still here. Like the Russell, friends, has been lagging a lot. You know how much a lot? It's still got 8% to go. Now, why we're excited is, remember, it was looking like this before, right? It was not moving up, and it started moving up, fake out, Japan, Pokemon Island, and now we're actually crawling back above the highs. But what happened recently? They started cutting rates. You see? So in the past, it wasn't always the Russell. The Russell, just like altcoins, had big moves. Now, it's not that much of a concern in terms of altcoins. It's not like exactly 4 years ago, altcoins were all much higher than now. It's not. You can see the real relationship of this on the others BTC chart, which is just a ratio of the outside top 10 coins versus Bitcoin. And luckily for you, as my friend, I have now put the fractals here. So you can see where we're meant to be. Look at this. We're meant to be up here. You see this, friends? By this time last cycles, we were already beaming, okay? This is actually big. We were meant to literally be, on our way here. In fact, if you go back exactly 4 years ago, around towards this area, within the next few weeks, you have Elon Musk shilling Doge. You know what I mean? That's starting to pop off. But right now, we are now past that time now. We're now past that time. We're moving in. So we're down here and we're meant to be up here. Now, this is a big, big, big difference, friends. How much of a difference is this? Altcoins are meant to be where they were in like March this year. You see? So altcoins are basically, many altcoins, they're meant to be like 2 to 3 to 4x higher, depending on the altcoin. You know, some of the other smaller cap meme coins and stuff, they're meant to be like 10x higher if you were to exactly repeat the past. And I guess that's like saying if rates were 0 to 1% today, if they were much lower. That's another way to say it. That's what my ultimate analysis shows you. So what I'm going to do now is play some pump music, just so we respect the friendship. I repeat, we respect the friendship here because we're moving throughout this cycle and we're waiting for this Russell 2000. Here I have major friendship alert because it is moving up, and that's good. It is moving up. And we needed to break the all-time high. And they're just liquidity buckets, right? So you have the stock market, S&P 500, NASDAQ, the Dow, and then you have Mr. Russell. They're all liquidity buckets. The stock market, S&P 500, that's the biggest bucket, right? And they fill up, they fill up, they fill up. And of course, we have the Russell's the smallest one. Just shitcoins, small cap shitcoins. Now, of course, they are companies and stuff, but you get it. Pretty much shitcoins, friends. Now, simultaneously, as it's happening, as I've shown you, we are witnessing the lowest performing altcoins of all time. And I have written here dog shit in brown text as well with a poopy emoji. So Ethereum is a great representation of this as well, because as you know, ETH BTC is also garbage. All right, big time. ETH BTC, friends, has had the worst performing run, ever. This is the longest ETH BTC drop of all time. Now, it's crazy when you think about it, because Ethereum is meant to offer price number go up and smart contract platform on all of these. But what we end up finding out is that because interest rates are high, the fact that you can get a government bond and get 4 or 5% yield from the government bond, that is dampening people's appetite to buy ETH versus Bitcoin. Now, it shouldn't make any sense, right? Same as altcoins. You're like, bro, who gives a shit about 2 or 3 or 4% yield? Who gives a crap? But you got to remember, friends, we're dealing in a world where bonds are worth like 200 trillion. You see? So if 1% of that money is affected, that's $2 trillion affected. Think about that. Every yield. 1% of the money moving. You see? So if you can make an extra percent as a bondholder, wow, that's 2 trillion out there on the line. You see? And if you lose a percent, that's 2 trillion less. So it doesn't disperse out one for one in terms of the bonds moving and then rotating out to stocks and metals and whatever the hell that is. But you get the point. Like the sector's so big, you're dealing with basis points here. So as we continue here, I reiterate, in the past cycles, it was never the Russell 2000 that was lagging. It was a problem with the lagging Dow Jones. So friends, the Dow Jones has always been like the dog shit index. And I'm going to show you just how accentuated it is. So Dow Jones, friends, just to show you how it's been lagging over time. I know the charts all look similar, but if you go to the top of the zombie virus right before the crash, the Dow is only up 42%. Look at this number. Now, what I'm going to do, I'm just going to show you the NASDAQ, okay? Since the top of the zombie virus peak, okay, look how much the NASDAQ is up. NASDAQ is up 103%, man. So the Dow Jones is only like 40%. The NASDAQ's up 100%. And remember, when you're dealing, when 1% means a lot in the stock market, that is enormous, huge difference. So it's always been the Dow Jones. And even in past cycles, always been the Dow Jones. And then it makes sense why, though, because the Dow Jones has the blue chips in it. So what's going on, right? What's going on here? It's the interest rates. It comes down to the interest rates. And look, someone could just say, oh, interest rates, and move on. Yes. And they go, oh, it's easy. There's utility and there's growth stocks, just like in the stock market world. But this is, it's fascinating because crypto people, schizophrenic, past, present, and future drug addicts. We've got a lot of weirdos, scammers, grifters, all parts of humanity. We're on a pirate island. We have amazing people, mavericks out here. JPEG swappers and altcoins and Pikachu hats and everything, right? If you talk to them about price to earnings and interest rates and all these other stuff, everyone's like, what the hell are you talking about, bro? They go, huh? What's an interest rate? You know what I mean? How much can I buy this shitcoin for? That's what they basically are thinking about. But if you go talk to the stock market guy, they're like, yeah, I'm a Wall Street guy. Yeah, I'm a Wall Street guy. You got the highest earnings, you know what I mean? You got no type of, I'm a Wall Street guy. Those types of people, friends, they know all about them. Somehow, they're both reflecting the same message. So even though individuals in crypto people are like schizo, no one knows what's going on, they got some hedge fund cucks and stuff here and there, but they don't know what the hell's going on. They're buying VC trash coins. None of them bought Pepe, none of them bought Doge, none of them buy anything that moves. So that's how you know they don't know what the hell's going on, okay? So it is fascinating that the wisdom of the crowd in markets as an effective pricing mechanism of all the information we have today represents all those variables and puts it into the price, which is what we've been seeing others BTC lagging, which is what we've been seeing right now. Okay. So without people knowing about, there's a differential here in bonds and all of these, the appetite reflects whatever's out in the world. That's why it's markets are more complicated than people think. But you also got to remember the beautiful part about markets is there's cycles. So it's really important. Yes, whatever the market says today is the real price. It's what people feel today. But you're not playing for today. You're playing for the world in 12 months, in 24 months, in 5 years, in 10 years. You see? So it all comes down to the level of interest rates, friends. And I'm going to show you now that I have another picture coming up. So altcoins, look at this. You go back to in 2012, 2016, and 2020, the interest rates were really low, as we know, 1%. Altcoins had more pump juice in them relative to where we are today. Not that much, but you can already see a disparity, okay? And it's the biggest reflection of that. It's just coincidental, friends. That's why Ethereum's third cycle curse ties in with all this. You see, that's wild. So Ethereum being a third cycle curse, you can also see this reflected by the Bitcoin dominance, and you can see it right here. So this is it, friends. So Bitcoin dominance, okay, by this time, last cycle, we had DeFi. Now, this move was Ethereum rising up and taking a big share from Bitcoin, a lot. And it made a lot of altcoins go nuts. There was a lot of pump and dumps and everything, but DeFi was big. The DeFi season was big. In fact, a lot of people are still here for DeFi, right? That's how big it was. We did not have anything that took away market share from Bitcoin in this year, in our Bitcoin halving year. In fact, Bitcoin dominance is still going up. So you can see in this high interest rate environment, people are just sitting on Bitcoin more and Bitcoin's getting money. Because, think about this. I guess the spot ETF and all these other buyers, don't try to figure out all this stuff. You never figure it out completely. But those people, when they're buying Bitcoin, they're not putting it in their mind in terms of like, hey, I want something that gives more yield. They don't think about yield, like return on money like that. They're thinking about it in terms of, hey, pet rock. Interest rates are high and debt and all this other stuff. Okay, I'm putting pet rock. It's digital gold. That's the narrative they want to latch to. Okay, but also it's a risk-off asset. It's a monetary base of crypto itself. Okay, so in those previous cycles, right, we had low interest rates and Dow Jones was dog shit. Like, why would you want to own this blue chip stuff when rates are 0 to 1%? The high growth stuff is just killing it all the time, okay? So that's all happening simultaneously. And you also saw, whilst high growth was being loved, you also saw, Ethereum start to rise up too. So, the Dow Jones, friends, it has companies like, Coca-Cola, Apple, Microsoft. It has Johnson & Johnson, who makes some absolutely amazing baby bum powder for baby bum rashes. So, yes, they're boring. They're already established to make a lot of money, solid. But you don't get the high upside, right, in a bull market as much as the other things. So, today we have a different world, and that's why I have this picture, which I'll show to you again. The yellow line here, see this yellow line? That is interest rate levels. Okay, we are no longer in the green box. We are in high red box, high red. Okay, so they put rates higher than they've ever been in a very, very long time and super aggressively. And now, small cap shitters are finding it hard to enjoy high valuations because they have gravity on their back. It's putting pressure everywhere. Also, I will also interject. I'll go back on this, touch on this later again. But think about this. Even with high interest rates, even with Bitcoin dominance going up, even with all of those, meme coins as a narrative still emerged as a discovery of a use case in 2024. The culture casino. So think about that. So you have two of the biggest hurdles you think of in crypto. Bitcoin dominance is going up, which means Bitcoin is taking up more dollars than everything else on average, number one. And number two, worst interest rates of all time. Which means why come into crypto for shit coinery when you can just buy a government bond for 5%? That's a lot of money. That's a lot of yield compared to the past. Doesn't matter. Meme coin still popped up. It's just showing you how powerful it was. And it is. Powerful? It's just, hey, we discovered a use case. What's everybody's problem? I'm wearing a Pikachu hat. I know what everyone's problem is. It's because they're from the old guard and they don't relate to the new people coming in. And here I am telling you, hey, bro, you're a 1995 internet nerd. You're playing Dungeons and Dragons with me. We're typing on internet forums. And here I am telling you, the new wave of the internet is just going to be people sending dog pictures of themselves. And girls are going to be sending pictures to like dudes, like just, OnlyFans is going to be a thing. People are going to use the internet to order pizza and all this other stuff. By the way, that was foreign back then. They were using the phones, like a telephone phone. And you can't compute that in your head because what you came into the internet for is like this little underground thing to chat people. Now people are like throwing their names out there. Back then on the internet, friends, no one wanted to put their name out there because not everybody was on the internet. Now everyone's showing their face. People are just like overexposing their personal lives. You see how much it changes? It's the same thing that's happening in crypto now. The new wave is coming in, more people. That's what adoption is. Just like the internet, friends. As everything else. So altcoins here, friends. It doesn't mean, by the way, when I say others BTC's poop, it doesn't mean that it goes down forever. It explains for you the gap. And what is the gap here? You can see it here on the chart. Others BTC, we're at the red. We should be at the yellow. Okay, so we're moving in through time. So basically, we should be where your portfolio was in like January, February, March this year, that wave, it should be around there. Kind of around there. It should be like 2, 3, 4x higher from today. But we're like, we're down 50 to 80%. That's why everyone's like waiting, like, oh man, so it's the longest period ever. Okay. Although the relationship is spiritual between stocks and, the Russell 2000, appreciate the wisdom of that crowd. It plugs all of these in, and that's the price we get. And that's the ratio we get. So in a nutshell, right, that gravity that has been put on everyone's backs, now with the US Fed cutting rates, it implies we're going to go the other way now. It does, unless the economy cracks. But hey, if the economy cracks hard, they have to put rates even lower to zero, which means we get an even bigger alt season. Basically, you got to be long. You have to be long. Because if they don't crack that much and rates only go back to their neutral rate from 5 back down to 3, that 5 down to 3, that 2%, that's huge. That is huge. Because I'll show you an example now here, friends. That is big. And that's enough to give you a big push. But if the economy cracks with a black swan, okay, sweet, they're going to put rates at 0%. Not going to happen, friends. But you can feel, I think it's going to happen. But if they did, hey, okay, you get like an even triple alt season then. Yeah. Now, people don't care about that 5% yield in DeFi because a government is still 5%, government bond yield, But when 5% goes down to 3%, there are people out there, friends, they're earning $500,000 a year out of their bond income per year, okay? $500,000 a year or even $50,000 a year. And then if it goes down to from $50K a year, now you're earning $30K a year, you're like, oh, crap, man, I've lost like 45% of my yearly income because they're not going to sell the principal, right? But you got to think about this. When there's big portfolios out there with trillions of dollars to move, billions of dollars, they start to move into stocks because now they want to grab stuff for their dividend yield as well. Because if a company is paying like, a 3% dividend yield and now your bond's only giving 3%. Okay, cool. You're like, wow, I'll get the stock. I'm living off the 3% anyway with some price fluctuation. That's how they start thinking. So when the bond yield, so if you look at TradingView, friends, if you type in bond futures price, they're inverted to the yield. So when the bond futures price is rallying, people's demand for that is going in, but that means they're accepting lower and lower yield. And when that happens, it's pushing up the bond prices with lowering the yield, which means if you want to buy bonds and you want income, you either have to buy a lot more or you got to look into riskier stuff. That's where we come in, yeah? So when they were riskier stuff, that's why they have stocks. And we go down the liquidity curve all the way. Once again, we end up in the crypto bucket. Finally, bleeding edge frontier, but you get the highest reward, right? So it's worth it. And this is why, my friends, we might finally see our very long alt season, which brings back DeFi and other narratives. But don't misconstrue what I'm saying. Okay, I'm telling you, let's play some Cranky G music, play some. There will be a resurrection, but it's a cycle 2 type of resurrection. It ain't cycle 1. It'll never be cycle 1. But it's still good. It's good enough to retire. Because friends, like in 2020, man, people put in like $400 into stuff. Now, you've been in here for multiple years. I know people used to put in $400. Now I've got like, $8,000 in. And I tell them, I go, man, you have 20 times more exposure than you're comfortable with many years ago. And they always say like, yeah, but I feel bad and stuff. I go, no. It's not about how you feel, bro. You always feel bad when prices go down. I'm just telling you, you have now an edge over everybody else who's not in. Because you've sat through this enough to get the conviction to hold 20 times higher leverage exposure, 20 times higher exposure, not $400. You have 8,000 in. You see, there are people who are going to be throwing in their $400 next year, and they're going to go through what you're going through in like another 4 years from that. So you now have an edge. You're beating everyone. You get compensated with a higher growth rate. So not just DeFi coins will resurrect, friend. Pretty much everything resurrects. It's just how much do they resurrect, and what level? Guessing. Everyone's guessing. ChainLink, Aave, Hex is DeFi as well, right? All these things start to become more attractive. But, if you knew where the rates were going to stop, you might have a bit of an edge, but you don't know the future. But maybe the rates aren't even important at all. It's just the fact that the rates are going to be cut. Because psychologically, you got to think what happened in 2022. They were raising rates, right? And then, so bonds were giving more yield. So people were happy to dump their crap for losses and go, just give me income. I don't want to, just give me income. There's too much badness out there. Crypto's gone to zero. I feel bad, right? So now what's happening? Now all those people with the bond income, you're chopping the income every month. You're like, oh, you were earning $5,000. Here's your $5,000 dividend payment. Okay, for next month, 4,700. And then 2 months later, 4,400. And then 3 months later, 3,800. That's them cutting the rates. And you're thinking, oh crap, man, I used to get $5,000 a month. Now I'm only getting 3,800. Do you see? So they have to go on seek more risk. So, of course, no matter how you spin it, it's a good indicator for us, friends, because meme coins emerging in a 5.5% US interest rate environment can't be understated. It can't. Because here's the thing. Logically, let's go back to Mr. Harry Hindsight in the year 2022 bear market. And I gave you a list of 15 potential narratives. Real world assets, artificial intelligence, layer 1, layer 2, gaming, metaverse, all of them, DeFi, all of these. Okay? There is a 0% chance, -5% chance, -5, that the crowd would have even thought meme coins would have been pumping the hardest out of every sector in a 5% interest rate environment. And this is the table here. I posted so many times in the year. Like this data, you just could not argue with it, man. Look at this. Meme coins, friends, at 14x. So explain to me how in an interest rate 5.5% environment with the Bitcoin dominance going up, where there is still a lot of skepticism, with the Russell 2000 still lagging, how is this sector, meme coins, how is that the speculative dog shit? How is that? When it went up the most, with the most hurdles. So, and by the way, friends, the same people who say it's like, oh, it makes no sense because they don't understand the culture casino, they don't understand mindshare, they don't understand network effects, they don't understand Metcalfe's law. They're holding like they're holding stuff like XRP, wondering why it's not $429 yet. Okay, they didn't get it. So we understand what's going on though. Okay, these two, it's a signal from the market. Okay, it's a signal from the market. Just like how in 2020, on-chain tokens had a lot of product market fit from the Uniswap formula, even though people were locked up at home, couldn't go to work, massive uncertainty in the world, and didn't even know if the world was going to be around tomorrow to live to tell the story. That is Uniswap here, okay? Now, only in hindsight do you look at it, but hey, man, Uniswap had a season when everything was still garbage, you understand? So these things, friends, they're signals for us. And I spoke about this in 2022. I said, in every Bitcoin halving year, we invent a new tech, but people don't pay attention to it. I don't know why. They keep fading it because they're from the old guard. And it's exactly what happened this year. Even I was in shock. I'm like, what? It's the meme coins? Right? So if that was even my reaction, right? So you can't deny this data. What's their excuse? What's their excuse, bro? Real world assets, you literally have Roca Negra coming in. By the way, the real world asset coins, a lot of them are scams. Like ONDO and stuff, they have like 2% circulating supply. Cobie said it's like one of the worst grifts of all time. Probably go up because they have the low float stuff, but whatever. AI, DeFi, DePIN, physical infrastructure, by the way. Explain to me how physical infrastructure implies that you have a stable business model there and you're providing a service. You're a utility coin. How the hell did meme coins go up 14x, whereas your thing in an interest rate environment of 5.5%, you're only up 81%? Meme coins literally went up like 15 times more than you. 15 times, but it means the product market fit is there, something going on. Okay, so after all of this, friends, you get to see the interest rate environment and exactly what has happened to get to this point. And now we're going to see the cycle 2 narrative, probably the part appear from them, right? The next cycle appears. And now, right, it's a question of like, hey, is the economy going to crack? What happens to the rates? It doesn't really matter, right? People are coming in. And the fact that we're looking at the rate of change, right? We've gone from 5%. The neutral rate is 3%. And actually, the US 2-year bond rate is like 3.5%. So they're still expecting another 1.5%. So every pretty much FOMC for the next, like 6 to 8 meetings is going to be at 25 or 50. Like chop. Just my guess, friends. What's going to happen? Just my guess. There's going to be, we get to like 3.5, and then they cruise it a bit, and then something cracks. Maybe that happens because when they cruise it, everyone's like, oh, wow, that's a cycle. We're great. Now we can hike again because the economy's going so bad. And by the way, this happened in history. Let me show you. And it happened coincidentally. You know how we have AI now? The last time this happened was in the 1990s, tech stocks. Look at this. So they hiked rates, and look, they started cutting, friends. See this cut? They started cutting, and then they went to neutral. So whilst they were cutting, look what ended up happening. The stock market went on a run again. It had jitters, but it went on a run again. See, they'll cut. Look, they went down here, and they go, oh, crap. You're overheating too much. And look what they had to end up doing. They had to hike rates. You see, by the way, look what the rates were here, 6.5%. So once again, look, you got to pay attention to this. Look what they ended up, friends. They stopped the cycle. They go, hey, we can cut now because we're going to wait for a recession to appear. And nothing appeared. And the stock market kept going up and up and up and up and up. They cut it once again. And look, they had to reverse it again. Look, they had to start hiking now. They go, oh, I guess the cycle's done. So they thought, oh, I guess the cycle's done. We got to hike rates. And then they were worried about, this thing maybe going off too much. And look what ends up happening then. And then, oh, crap, we have to cut. See that? So you just got to live it right there. The technology, right, sector, internet stocks, brought forward the economy, kept advancing. But at the final end, they had to start hiking rates again. But then like, oh, crap, wrong move. Just guessing. You never know, man. Maybe rates go from 5 down to 3. And then we go, oh, we can now hike again. Like the economy's doing well. I guess we have to hike again, and they start hiking a bit, and then within 3 to 6 months, economy just does a full U-turn, and they have to chop it down again. And such a scenario would screw so many non-believers, and only people like us, we win, because we were waiting for next year anyway. The mechanism of how we got there, we were never even trying to guess. So there you go, friends. In a nutshell, you've now seen what happens, I guess, to altcoins and all these when interest rates environments are like that. But who's going to do the mogging, friends? We are. We are going to mog everybody because we believed the whole time. We say, screw your interest rates, man. We're going to come out alive. You should be inspired, man. Meme coins, despite all that hurdle and all the pain and the pressure, they emerged. Makes you think, right, what's ahead? We're going to do a lot of mogging to the non-believers, friends, because only the strong will survive. And you and I have the strongest friendship of all. Make sure you like, subscribe, belly button and all. Don't forget he loves you. Catch you in the next one.